Hey guys, in today's video we're just going to talk about something very simple. What is a stock? So a stock is basically a security of a company, meaning that you're owning a partially of the company. It could be a building, it could be all the equipments in this company, or it could be all the people that works there, and then that's the company. And then so simply explaining a stock, it means that you are owning a partial share of this company. And we can make an example. Let's say that you're a business owner, you sell hamburgers, and let's say you would want to open a store, and you're this store you're owning, you're making, let's say, 100K every year, and then you want to step up your game, and then you want to maybe open 5 stores or maybe 10 stores. What happened is that you will go to investors to raise money, raise funds for your company, meaning that let's say you're raising money for your company and you want to raise 1 million from one investor, and then another million for another store, and then another million for another store, and then suddenly you have 3 million. And then what happens is that those 3 investors, they own shares in your company. And then since if you only have one store, you only earn 100K, but with 3 of these stores, you would also then earn 4 times more. So it would mean that you will own 400K with 3 stores. What happens is that you're actually giving these investors a part of your shares, meaning that you own, let's say you are sold 50% of your company to those investors, and you own 50% yourself. What would mean that is that those investors would each earn a part of this pie here. You can see here they own a little bit, and they own a little bit, and also they will own a little bit. And then since you own 50% of your company, you would then earn half of it. That means that you will earn 200K. So even if you are earning only less of the company, you will earn more money, since that you have more capital in your company to and have more stores. And then one is if you only have one store. So that's the reason that people are letting investors into your companies, and then that's the reason there's shares in companies. And then the share stocks, that's the same thing when we're talking about that. And we also want to say is that there's 2 types of companies. You have these public companies, and you also have private companies. The difference between the public companies and the private companies is that private companies are companies that are owned privately. Let's say the local store, let's say there's a restaurant in your local community. That store, you cannot just go ahead and buy it unless you know the owner, or you're tight friends with those people that works at the store. And or you maybe are some popular investor, or you're an investor that has enough capital to invest in those stores. So private companies, those companies are very hard to invest in. So when we're talking about stocks and yields and dividends, and those stocks and those shares today, we are actually talking about public companies. Public companies are companies that you can just go ahead and buy. Just call your bank, for example, and let's say you want an Apple store. You just can call your bank and you say you want to buy shares in Apple and shares in Google. Since those companies are public companies, everyone can buy stocks in them, and everybody can trade those companies. So when we're talking about stocks and we do trading and investing, we're also investing in those public companies. So thanks for watching today. So just want to say that we appreciate it, guys, and always smash the like button for the YouTube algorithm, and of course subscribe to my channel if you want to see more of these videos, and see ya.